I'm Owen Bigland. This is the Inside Edge video blog. As promised, I want to give you some more takeaways from the investor summit that I was at in New York City, this private equity firm and some of their high net worth clients. Every year I come back from this seminar pretty reinvigorated, always pick up some good information from it. So the follow-up I did last month on keeping your eyes on the big picture and starting to filter who you listen to. We're bombarded with so much information from Twitter and anonymous bloggers and statistics and analysts and predictors. A lot of these private equity guys say focused on the big picture. Just buy and hold quality assets. So on that note, another one of their keynote speakers talked about good things happen when you're in the market and you stay in the market for long periods of time. And I can't agree more with this as well. Give you a few examples both in real estate and stocks. So if you've read my book, I've been investing in the stock market for over 30 years now. Right now, I probably own about 30 to 35 individual companies. These are US, Canadian, and international equities. Everything from Johnson & Johnson to Merck to Apple to TD Bank and Royal Bank. So I can tell you firsthand that good things happen to me on a monthly basis with my stock portfolio. And some of the good things that happen is, first off, all the companies I own report their earnings quarterly. So 4 times a year, you'll get the earnings reports. Now, not every time, not with every company do they beat earnings, but oftentimes the companies I own will beat the expectations on the earnings. When you get that, you get a nice stock bump in that day's price. The other thing with pretty much all the companies I own pay a dividend, but not only do they pay a dividend, they tend to increase that dividend every year. So once a year, I will get a nice dividend increase or a raise on one of the companies I own. You'll also get things like stock splits, where they'll split for every one share you own, you'll get 2. Doesn't necessarily have a huge impact on the price in the short term, but it's nice to have, and it often does give a psychological boost to the stock price. You'll also get buybacks that are announced all the time, where the company will announce a $5 or $10 billion stock buyback. They've got so much free cash flow that they're going to start buying back their own shares, which boosts the earnings and will eventually boost the stock price. Again, more money for me. You'll get mergers and acquisitions all the time. As I say, not a month goes by when at least several good things happen to one of the companies I own. Not to mention the fact that over a long period of time, you're collecting the dividends and you're getting that capital gain appreciation. The same thing can be said for real estate. As you know, I've owned Vancouver real estate for over 30 years. I just buy it, I hold it. I'm either living in it as my principal residence or I've got it as an investment property and I've got a tenant in there paying down all my expenses and then some. So good things happen when you own Vancouver real estate for the long term. Of course, you're going to get the price appreciation over time. Not in the short term, as I've always blogged about here. Markets are volatile, stock market and the real estate market in the short term. But when you look at it from 10, 15, 20, 30-year horizons, the price of that Vancouver real estate will be worth far more 20 years from now than what you're paying for it today. That is guaranteed. Remember that. Other good things that can happen, there's all kinds of things. Rent prices continue to go up. So every time when I get a tenant turnover, I'm usually able to increase that rent by $100 or $200 or $300 more a month, depending on how long my existing tenant had been in there. But, I can think offhand, I have detached homes in East Vancouver right now, which I blogged about before, that are well off their highs. Buying a detached home right now, I could see a lot of good things happening to you over the next 10, 15, 20 years. Things like land assemblies, rezoning. I got one particular house that's just off Knight Street. It's on a quiet street just off Knight. This is just speculation on my part, but I'm going to say in the next decade, in the next 10, 15 years, let's say, I've got a pretty good feeling that this street will be rezoned for multifamily. They might not be building high rises on this street, but I could see them putting in townhomes or row houses on this block, and some of the peripheral streets that are just off some of the main streets, like Knight, like Main Street, like Cambie Street. You buy a detached house today at 1.3 million, don't be surprised in 10 years if you're getting that rezoned. A developer's coming along and is going to increase the density twofold or threefold and put row houses on these streets. So that would be something that would be a nice windfall for a potential owner down the road. So a few other takeaways too. One of the best ways, and I talk a lot about it in my book here. It's been a while since I've held up my book and plugged my book. If you haven't bought it, you should. You'll learn a lot from it. The reviews have been fantastic, as you can see on Amazon. One of the best ways I find to get in the market, whether it's real estate or stock market, and stay the course. So meaning that you buy it and hold these assets. One of the best ways is to stop focusing on what the price of that piece of real estate is or what that stock is on a day-to-day basis. First off, you should never be doing that anyways with your principal residence. Your principal residence is a roof over your head, it's shelter, and that should be first and foremost. Even if you're buying investment properties, I pay very little attention to the day-to-day price fluctuations or year-to-year price fluctuations on what my units are worth. Why should I? I'm not interested in selling them. I've got tenants and I'm getting cash flow from them. The same thing should be with your stock portfolio. What the day-to-day price does every day or 5 days a week when the stock market is open shouldn't really matter to you that much. Look at it instead from what the day-to-day price is. Look at your portfolio and what it will produce for you as far as income or cash flow. So if it's stocks, good dividend paying stocks, they're going to pay you a nice quarterly dividend check 4 times a year. If it's real estate, you've got a tenant in there. Every month that tenant is going to be sending you a rent check. So if you focus on what your portfolio, your stocks and real estate produce for you as far as passive income, as opposed to what the price is doing day to day, I think you'll have a lot better chance of staying the course, staying in the market, and good things will happen to you over the long term. And I talk so much about this in my book. It's really what I think separates my book from a lot of the investment books that are out there. And the feedback I've gotten from people who have bought my book and read it substantiates that. The first couple of chapters in my book are setting the mental attitude you need to have, the investor mindset, as opposed to the speculator or trader's mindset. You have to get that started first. Otherwise, it's going to be a lost cause if you can't focus on the long term and holding quality assets. As in, you're an investor, you're not a speculator. Final few things I just wanted to talk about. One of the other things they talked about at this seminar were some of the traits of successful people, of millionaires, of high net worth clients. And I've read these things before in various books and magazines, but I'll just give you an update on them here. Most successful people, multimillionaires, high net worth individuals generally have multiple streams of income. Most are self-employed. The vast majority of the guys that I rub shoulders with in New York, these high net worth clients, most of them are self-employed. They're business owners. There's some professionals there, surgeons, doctors, that kind of thing. But for the most part, most are self-employed. They have multiple streams of income, which is so important. So not only do they have the income that's coming from their job, but they've got rental income, real estate investments, and they've all got a substantial stock portfolio. That stock portfolio is paying them dividends. Every single week they're getting a dividend check. You have to remember, companies pay their dividends 4 times a year. When you own 40 or 50 companies, you're getting a check almost every week from one of your holdings. So they've all got multiple revenue streams. The other thing is, of course, those multiple revenue streams are passive. And again, let's plug my book one more time. That's why I call this book Along for the Ride, getting your money to work for you through real estate and stocks. Passive income is the gravy train. That's what life is all about, is earning passive income. I love my job. I like working. My wife will tell you I work too much. I put in 12-hour days because I enjoy it. But if I didn't want to, I don't have to work for a living. I can live off the passive income that my real estate and my stocks provide for me every single month, and without touching anything, without having to sell any assets. And that's when life gets sweet. When you're collecting dividend checks and rent checks, you don't have to actively work for your paycheck. Passive income is the only way you're going to achieve any type of wealth or any type of financial security. You have to realize that. There is not enough working hours in the day to do it. And the tax man's going to take almost half from you. So you've got to structure it in a way that you can work, but also have income flows coming in passively. My book will set the stage and give you the blueprint on how to do it. The other thing is all successful people invest in themselves. Very important. Again, couldn't agree more. I'm always taking courses on investing. I'm always going to courses at the real estate board. I read, I subscribe to magazines, trade magazines, books. I'm under the belief you can never stop learning and investing in yourself, educating yourself. Learn how to invest, learn how to make your money work for you. It takes time. You're going to have to put in some effort, but it will pay off and you'll be rewarded down the road. Final thing is, a lot of them will have a mastermind group, and that's something that, if you've ever read Think and Grow Rich by Napoleon Hill, he talks a lot about that. Hopefully, I know with a lot of you that watch my blog and subscribe to my blog, I'm part of your mastermind group, and I appreciate it. I'm flattered by it, that I'm one of the sources that you take in on a regular basis to help educate yourself and learn more about real estate and getting passive income. So those were some of the takeaways from my recent trip to New York. I might do one more blog because I still have a few other things I might want to talk about here as well, maybe later this winter. But as always, I'm Owen Bigland. If you haven't subscribed to my YouTube channel, please do. I'll see you next time.